Hello, my name is Steve Bigelow with the Candlestick Forum. As we saw after the Fed meeting announcements, there was a lot of whipsaw in this market. It's not unusual to see the day of the announcement whipsawing to the upside, but then when reality hits, the reason this market was in a downtrend was for all the reasons that they were having to raise interest rates because of strong inflation, everything else that was selling off the market. When it gapped down today, that kind of gave us this double doji, which is an extremely strong trend indicator. It acts like a mini J-hook pattern. When they gapped the market down and traded down 700 points today, it still showed a lot of strength to the downside. Same scenario, when we saw the NASDAQ come out of this congestion area, we expected wave 3. And so that wave 3 is in progress. Then it hit the support level, but there's your bearish kicker signal down through that level. That bearish kicker signal reveals still a lot of strength to the downside. That makes utilizing the sell signals or the sell patterns, again, a double doji on upstart, implies that this downtrend is still in progress, at least targeting this area for the first target. Or in NVIDIA, when they took it up, and then anytime you see trading occurring back below the previous day's open and go in the opposite direction, that's very powerful bearish sentiment. So if you covered your short positions on this day, you could reestablish them with a high degree of probability this downtrend was still in progress when they gapped it down. Same scenario on Etsy. Good place was to cover the short positions when it was trading positive with the expectation that it was probably coming back up to test the T-line. Today, when they gapped it down and did a bearish kicker signal, that still indicates that this bearish J-hook pattern is in progress. So, oops, didn't put a label on here. Apple, the same scenario, kind of a bearish double doji. So if the biggies are trading off, like Apple, Amazon, Tesla, all the ones that everybody trades, that's another additional confirmation that the bearish sentiment is still overriding this market. And conversely, patterns also illustrate when things are acting well. We could see the classic pattern, a fry pan bottom with a J-hook pattern on ABCL. And notice that it was off 1 penny today after opening lower. Look at the strength in this. And this, again, is kind of illustrating the strength of a pattern, which is more than just a one-day trading. It's a buildup of investor sentiment. So you can always find good bullish trades using simple candlestick scans, even in a very powerful down market. So right now, this is strong indication that we're probably still in a wave 3 to the downside. We're going to be demonstrating how to utilize this information for day trade setups, because there's some very powerful signal and patterns that a trader, if they want to do day trades or very fine-tuned swing trade entries based upon how prices move after a candlestick signal. With that, look for more downside in this market. We'll see everybody in the chat rooms.